What a day today in the market. Today, February 4th, 2026. At some point, the Nasdaq was down over 2%. Now it has spared a lot of the losses. Regardless, what I'm gonna do, I'm gonna sell cover call today against some of my positions. Today is Wednesday, and I'm gonna set the expiration date 2 days away, which is Friday, 6th of February. Now, today I am profiting a lot. This one account I was up 18 grand nearly, a little less now, while the market is experiencing a sell-off, especially in the tech sector, and of course the sell-off continues in the software sector. Let me see. The first thing I was gonna do is sell cover call contracts against Pfizer. Let me see. Pfizer right here. I have currently 600 shares of Pfizer for a total gain just shy of 3%, which translates in just a little bit over $450 of gain. Only today is up 4.5% nearly, and Pfizer reported earnings. I believe it was yesterday, where it dropped about 3.5% on disappointing news about the weight loss pills. But regardless, I have again 600 shares, 1, 2, 3, 4, of which 400 are already tied up in 4 contracts. Okay, one of them actually expires February 6th, and it is in the money because I have it at 26 strike price. The other one at 226.50 strike price. So if things stay the same, those shares are possibly gonna be called away from me, but I don't care about that. I already collected the premium, and that is what I'm after. Now, this is my income account. I have several accounts, but this is what fuels all those others. So I'm focused on generating income, and the way I do it is buying dividend stocks, selling cover calls. I do buy with consistency bonds, ETFs. It could be a government bond, an investment grade corporate bond, or junk bonds. It all depends. But anyways, I dollar cost average into those, and thereby with consistency collecting anywhere between 3.5 for government bonds all the way to 14, 15, 16% a year on some of those junk bonds. I would say on my bonds on average possibly 6-7% return on my money on those. But that's a whole another conversation for a different day. So now right here I got 400 shares tied up. I can buy today 2 more contracts. I am carrying Pfizer at about $26 and an eighth. So I already have equity built in it. It's been trading at 26.90. So let's say that I got 75 cents of equity a share, 75 cents a share. On top of that, I wanna see what the premium look like on this. So let me go on Pfizer. Okay, let me go under options. Expiration February 6th. Okay, if I was to sell at a strike price of 27, I'm gonna profit about 85 cents a share if the shares are gonna be called away. Okay, 75 cents a share plus 23 cents a share. So you got 75 cents a share, $0.23 a share. I'm gonna profit. In the case the shares are gonna be called away from me, I'm gonna profit 98 cents a share. Guys, you're talking about nearly $1 a share over an investment of the price I'm carrying it. You guys are looking at nearly 4%. 4% return on my money in 2 days. 4%. Now, if those shares are not going to be called away, I'm only going to profit 23 cents. In that case, you are looking at nearly 1% return on my money. But guys, 1% return on my money over 2 days. Okay, if you can rinse and repeat this and keep doing the same thing over and over again, so in the worst case scenario, if I can repeat this 52 weeks of the year, it's gonna profit 46% return on my money. 46%. And that is the worst case scenario. Now, of course, anything can happen to the stock price, but I'm gonna go ahead and do that. So I have a strike price of 27. Now, 2 days, a good chance that those shares are gonna be called away because Pfizer is already up nearly 4.5% today, and if the up continues, well, then that's gonna cause the shares to be called away, and in that case, I'm gonna profit much more. Again, I'm only interested in income. I'm not interested about the share price. I buy those like I buy groceries. I collect dividends at the right point. I sell cover calls against it. The idea is that you want to sell cover calls when you have equity in the position. Okay, so now in this case, I'm gonna go ahead. I'm gonna sell to open. Quantity, I got 2 contracts. February 6, strike 27. Price type, I'm gonna put here market. Now, this is gonna deposit in my account about $41. I believe that's pretty easy money. Think about it. 2 days. I'm gonna have to wait up until Friday, and it's either gonna be a 1% return on my money or a nearly 4% return on my money. Mind blowing. So I'm gonna go ahead and place the order. Place. Okay, the order has been placed. I already got notified on my phone. Also, it says that it failed at 24 cents. Okay, I don't know if you guys are gonna be able to see. Regardless, the bid and ask spread was 22, 24, and it failed at 24. Better. Now, the other thing to do is going back to my right here. I'm gonna go ahead and place another cover call against this time AMDL. This one, let me double check. Now AMD reported AMD reported earnings, and AMD, as we speak, is down over 16%. And what a shocking reaction, okay? It appears that the reason for that was that a disappointing future forecast, which is quite disappointing considering that the price of AMD went up a lot with all the expectations about what they were going to do with AI chips, and it appears investors did not like the earnings call. But regardless, here I'm carrying this at about $12.85. I'm pretty even on that. Let me go and look at the option for that. Now all those other shares that I had that are in the red because today AMDL, which is the double X leverage ETF for AMD, is down over 33%. Over 33%. Wow, what a job. But I profited on those anyways on the option because I was buying AMDL at the 18, 19, 20, 21, and I sold the cover calls against it about these levels because I knew that something was going to give regardless. And anyways, the market is down today quite a bit. I think it's paired a little bit of the losses, but regardless, I believe that the whole thing is still overpriced and overpriced by a lot. And with midterm elections coming March, end of March, April, May, I think the stock market is gonna soften up quite a bit, like it always does during election year. Options. February 6th. Now here, if I was to sell AMDL at 13, which is slightly out of the money, let's see, the bid and ask spread 55 cents to 70 cents a share. Now guys, I want you to realize, if those shares are gonna be called away from me, okay, I'm gonna profit 70 cents. I'm gonna profit 17 cents on the appreciation. Call it 60 cents. You're looking at 77 cents on an investment of let's say 13 bucks a share. This is a 6% return on my money in 2 days. So same as I was saying about Pfizer. Now in the case the price of AMDL drops further by February 6th, that means that the shares are not gonna be called away. But even in that case, I'm profiting, let's say 60 cents on an investment of 13 cents a share, which is actually less, and this is gonna be a return of 4.5% on my money in 2 days. Now, of course, I say 2 days, but it's really the weekly thing. But yeah, I mean, I write cover calls always on the same positions, or the positions that I'm comfortable with, and where the premium is more juicy. And I'm gonna go ahead and do this now at a strike price of 13. This is a huge return, guys. I mean, you don't have to think about the strike price if your stock price hits the strike price. That's not important. You're only focused on the income that this thing generates, okay? So it's a call. I'm gonna sell to open, and it is one contract. The last price was 68 cents. Okay, so in this case, that's gonna put 68 bucks deposited in my account today. I'm gonna put here market, and I'm gonna do the order. Strike 13. Okay, February 6th, 2 days away. Place. Order has been placed. Let's see. And guys, actually my order was placed at 70 cents. 70 cents of premium a share. I like that even better. 70 cents. So 70 cents a share I'm making for a total deposit of $70. 54, I think. There was the other one. I already generated an income of 124 bucks in 5 minutes that I logged in my E-Trade account. And the last one that I was gonna place another cover call against it was my position in TQQQ. Now, like you guys see on this one account, I'm up 13 grand in 1 day. 13 grand, while the broad market is down. Nasdaq currently is down a percentage at 1.13% down. Let me pull the TQQQ next. Okay, on TQQQ, I own 511 shares. I'm overall down on my position because stock market was down yesterday and it's still down today. On this one, I have 400 shares already tied up. Now this one too expires February 6th, and as of today, because the strike was 53.50 and TQQQ is trading at 50.34, now if things stay the same, I'm gonna get to keep those shares. Regardless, let's move on here. We got 20 more minutes and the market is going to close. In reality, we got 18 minutes. Option. Now, after close, we have Alphabet earnings, and I don't know how that's gonna come out and what type of reaction the broad market is gonna have. I don't know. Possibly, I think they are going to beat earnings. But one of the things that we are seeing now, even if they keep beating earnings, the market might fall because everything right now is priced for perfection. So even if Google beats earnings, unless they beat earnings by a lot, by 10, 15, 20%, anything less than that, it might cause the stock price to fall. We'll have to wait and see, and we'll have to wait and see the earnings call too. Regardless, this is trading 50.30. I'm gonna let go of my shares. Possibly at 51, at a strike price of 51. That's gonna deposit about $110 in my account. 120, I already generated income. I got another $100 here. That is $220 of income. This is only from those 3 trades. Of course, I got other things, but I mean, it's worth it for me to wait until Friday and see how everything shapes out. But regardless, I don't mind the shares being called away. I'm really focused on income, because I know some of you guys might be thinking, okay, you're gonna lose a lot of the upside. But guys, those triple leverage ETFs, they are not something that you can rely on. I mean, they fluctuate a lot. This thing, they can lose 15, 20, 25% quickly. Okay. So the other thing too is that you want to get rid of those. You might buy and trade them in the short term because they decay a lot with points. They charge you fees and of course a volatility drag. So I'm gonna go ahead and at a strike price of a strike price of 51. I'm tempted about doing like a strike price of 50, but I mean, it doesn't really matter to me a lot. Okay. Sell to open. One contract. Strike price of 51. Expiration February 6th. The last was 98 cents a share. I'm gonna put here market. I'm gonna place the order. Place. I wanna double check here. I got notified on my phone here, and actually this was filled at 95. 95 cents a share, which it doesn't seem like a lot, but you know, I have equity already built into this one position. I think at this point I already had like nearly $1 a share, because I bought this earlier when the market was 2% down, the Nasdaq, and this being triple leverage, that translate in a larger appreciation. But regardless, if you only focused on the income, basically let's call it $100 of income divided by an investment of about, let's call it about $5,000. This is a 2% return, guys. 2% return on my money. Okay, all I have to do is wait until Friday and see the stock price hits the strike price. But regardless, this is money deposited in my account. Okay, today. Now here, let me double check one thing. Well, regardless, I generated $220 with the same time that it would take to place a food delivery order. If it was Uber Eats or DoorDash, just about the same time. Actually, I can do this a lot faster now for the sake of the video, to explain to you guys what I'm doing and keep you up to date. But regardless, I think I'm gonna wrap up this right here, and happy trading, and I'll see you in the next one.